Earning six figures, you might be eyeing those mansions at the top of the hill. Keep dreaming, because in 2023, $100,000 a year can buy you a mobile home. It might sound crazy, but there are places in the US where even a six-figure salary can't buy a single-family home. And there are places where six figures will buy you beachfront property. Let's talk about how that's possible, what goes into your mortgage, and how much house you can really afford. Whether you're making the big bucks or just over 17K, you'll be surprised by the possibilities. First, how much can you actually pay per month toward the home? It's best to start with your budget and then use that number to find your house price. How much should you pay per month towards your mortgage? Lenders can qualify you for up to 50% debt to income. This means that your liabilities or debts you have to pay should be no more than half the amount you earn. Additionally, general wisdom says you should pay no more than 28% of your income pre-tax on a mortgage payment. This means that if you make $5,000 a month, you shouldn't spend more than $1,400 on your monthly mortgage payment. We'll use that 28% rule to calculate how much house you can afford in 2023. You can use it yourself to find out your exact cap. How is your monthly mortgage payment calculated? It actually relies on a lot more than just the house's total cost. Your down payment, total mortgage loan amount, length of mortgage, and interest rate all go into the calculation. A down payment is the total amount you can pay immediately toward the cost of the home. The more you put down, the better, because it lowers your total loan amount and monthly payment. For the sake of our calculations, we're assuming you have 10% saved for a down payment. Financial experts recommend 20%. If you put this much down, you won't have to pay for private mortgage insurance or PMI. PMI protects the lender in case you default on your home. Paying 20% down is more of a guarantee that you won't default on your mortgage. But not many people are able to do 20% down when they buy their home, so we picked something more close to reality's average. However, if you can pay more than 10% down, that will likely mean you can afford more than our estimates. The total mortgage loan amount is the cost of the home minus your down payment. This is how much the bank is loaning you and what you'll have to pay off over time. The length of the mortgage is how long you have to pay off the loan completely. You can pay it off early, and many people do, but for the life of the loan, you will be gathering interest, and you will need to pay regularly, or the bank can foreclose and take your house. Shorter mortgages have higher monthly payments, but longer mortgages mean you'll be paying off a bigger amount overall over time because of the accumulated interest. For our calculations, we're using a 30-year loan term, which is one of the most popular. The interest rate on your mortgage is determined by a variety of factors, the most important of which is the health and state of the economy. You can't do much about that. What you can do to get a better interest rate is have a good credit score. A good credit score is anything over 700, but the higher the better, and the less you'll have to pay for your home. You can also pay points up front for a lower interest rate. This is basically a lender taking your money right now so you don't have to pay so much later. It's separate from a down payment, and instead of lowering the overall amount of your loan, it lowers your interest rate. For the interest rate for our calculations, we used 7.5%. We chose that number because it's barely above the current national average, and it's unlikely interest rates will be going down anytime soon. You may be able to afford more than we suggest here if you have an exceptionally good credit score. You can make a high down payment, or you're looking to buy in a region with a slow market. Now that you know how these things are calculated and how much you can pay, how much house will you get in 2023? As we've already discussed, there are many factors that go into the cost of a house, but we're going to give you a general idea of the approximate amount you can afford, salary level by salary level. Because housing costs vary so widely between states, for each range, we're going to show you an example of a house you can afford in California and Maine. California is in the top range for national housing prices, while Maine is more in the middle. Let's start with a salary range between $17,000 and $30,000 a year. If you're making less than this, you are unlikely to be able to get a mortgage, and it would be better to focus on saving and increasing your earning potential. If you make between $17,000 and $30,000, you can buy a house worth around $80,000. In California, $80,000 will likely buy you one bed, one bath, less than 1,000 square foot mobile home. You can find homes with 2 beds and 2 baths, but they will likely be less than 1,000 square feet. In Maine, you could buy a 2 beds, 2 bath home around 1,000 square foot. If you make between $30,000 and $50,000, you can buy a house worth around $125,000. In California, that means 2 beds, 2 baths, and 1,000 square feet, but they are still almost exclusively mobile homes. In Maine, you could get 3 beds, 2 baths, between 1,000 to 1,500 square feet. For those who make between $50,000 and $70,000, you could afford a house worth around $200,000. If you're buying in California, you are still in the mobile home range. In California, these are referred to as manufactured homes. You can get one with 2 beds, 2 baths, and up to 1,500 square feet. In Maine, this won't get you much more house than the previous range. You're still looking at around 3 beds, 2 baths, and up to 1,500 square feet. For the next range, let's look at those who earn between $70,000 and $90,000. If your household earns that much annually, you could afford a house costing $250,000. For that amount in California, if you're not interested in the manufactured homes, a condo is your best bet. These will be up to 2 beds, 1 bath, and less than 1,000 square feet. However, you could get a mobile home with 3 beds, 2 baths, and between 1,500 and 2,000 square feet. In Maine, $250,000 will still get you around 3 beds, 2 baths, but you could get up to 2,000 square feet. What about when we get into the 6 figures? For those making between $90,000 and $110,000 annually, you can afford about $350,000 for your home. In California, this could mean exiting the manufactured home range, although those are still an option. For single-family units, you're looking at 2 beds, 1 bath, and less than 1,000 square feet. In Maine, this could get you 3 beds, 3 baths, and between 2,000 to 3,000 square feet. For those making between $110,000 and $130,000, you can afford a house worth around $400,000. At California prices, this will get you 3 beds, 2 baths, and around 1,200 square feet. In Maine, $400,000 will get you 4 beds, 3 baths, but around the same square footage as the previous range. However, this amount could get you waterfront property or larger lot sizes. Those earning between $130,000 and $150,000 can afford a house worth around $450,000, but you'll see the same sorts of sizes as in the previous range. Let's jump up to earning between $150,000 and $200,000. Those in this bracket can afford a house worth up to $600,000. In California, $600K could get you 4 beds, 2 baths, and up to 2,000 square foot. If you're fine with a condo or less space, you can get closer and closer to the popular city centers at this price. In Maine, $600K could get you beachfront property, although you will be taking a considerable size hit for the pleasure. Beachfront houses in this range are usually less than 1,000 square feet. If you don't need to see the ocean from your kitchen window, you could purchase a 5-bedroom, 3-bath home with up to 3,500 square feet. How about when we break $200,000 in annual salary? For those earning between $200,000 and $250,000, you could afford a house worth $750,000. That amount in California could get you 6 beds, 3 baths, over 2,000 square feet. However, if you're looking to live in LA County, it'll be half that. $750,000 in Maine can purchase 6 beds, 3 baths, and around 4,000 square feet. As we edge even higher into the $250,000 to $300,000 range, you could afford a house worth about $900,000. In California, that could get you 3 beds, 2 baths, between 1,500 to 2,000 square foot, even in LA County. In more suburban areas, you could get 6 beds, 4 baths, and around 4,000 square feet. In Maine, $900,000 could get you 8 beds, 4 baths, and around 5,000 square foot. How much do you need to make to afford a $1 million home? If you want to safely purchase a $1 million home, you should be making at least $300,000 in annual household income. What can you get for $1 million in California? 6 beds, 3 baths, and around 3,000 foot. What about $1 million in Maine? You can get 7 beds, 6 baths, and waterfront property in Maine for $1 million. Remember, we're making some generalizations with these ranges. Prices can vary widely, even from city to city or even between neighborhoods in the same city, so do your research when deciding where to purchase your home. Were you shocked by the amount of house you can purchase even with a 6-figure income? Why do you need to be making $300,000 a year to purchase a $1 million home? The primary culprit is interest rates. Because they aren't likely to come down anytime soon, 2023 is a bad year to purchase a home. For more reasons why you should wait to purchase a home, watch this video.